Let me ask you a quick question. What if you woke up tomorrow morning and saw in the headlines the Federal Reserve has announced financial assistance is coming this year? Would you feel pretty happy and excited? I'm not sure about you, but I would feel very happy about that, and I would also be very excited about it because I think we can all probably recognize and agree the last couple years here have been very difficult financially for the vast majority of the population. Well, the good news is you don't need to wait until the headlines tomorrow morning because we just got some new information out of the Federal Reserve that was just released that I do want to bring to your attention right here in this video, and they have indicated financial assistance coming this year. I know, pretty exciting, right? Well, let's get into it and talk about the details, as that is exactly what I'm going to focus on here in the video. Let's get right into it. All right, now I think we can all probably recognize as well, inflation has been very, very high over the last couple years. In fact, inflation topped out at 9.1% in June of 2022. Now, I recognize as well, June 2022 was well over a year and a half ago. However, it took over a year for inflation to ramp up to that 9.1% peak, and it's taken well over a year and a half to bring inflation back down to still above 3%, where we currently are as of right now, which is still over 1% higher than the target that the Federal Reserve wants inflation to be at, which is their benchmark of 2%. Well, as a result of that, the last couple years here, the Federal Reserve has also been aggressively raising interest rates to lower the appetite of borrowing money for people like you and me, as well as businesses. And again, because when they continue to raise interest rates, people like you and me say, wait, why would I want to pay 8% to borrow money? Why would I want to pay 11% to borrow money? Or in the case of a credit card, why would I want to continue to spend money and floating a balance at 23% interest, which, by the way, I'm currently doing that right now. Not a fun time. Just saying, please do not do that. If you can avoid racking up a balance on a credit card, try to avoid that. Paying down a balance of 23% interest on that is honestly pretty difficult. Not having a fun time. Just saying, okay? So anyway, my point is, as a result of this, the Federal Reserve has aggressively raised interest rates, even though the last couple meetings here, they have paused as far as what they're doing with their interest rate policy, but as a result of that, it's still very interesting to watch this whole thing play out because they raised interest rates aggressively, and now they've been sitting around this 5.25% and to 5.5% range is what their target is as of right now. However, they just got some information out, which is the meeting minutes for their last FOMC meeting were just released yesterday. Okay, that's what I want to focus on here in this video and share with you the details about this because they have clearly indicated in this report and the meeting minutes that were just released. Like I said yesterday, they've indicated financial assistance coming this year, okay? Let me explain exactly what I mean by this. So, remember, the whole point behind raising interest rates aggressively like they have for the last year and a half or so is to decrease the appetite of borrowing money, okay? Because as money gets more expensive to borrow, now they say, hey, we're not going to borrow as much money right now. We're not going to spend as much money. Again, people like you and me and small businesses, medium businesses, large businesses, stuff like that, because it's so expensive to borrow that money because of the interest rates, okay? Well, as a result of that, they keep interest rates very high, and then we spend less money, and then supply and demand, as in, less money circulating through the economy because there's less demand for products and services, and ultimately brings inflation down. That's the whole logic behind the whole thing, right? So the whole situation is now, based on the meeting minutes that we just got yesterday, and what the Federal Reserve, people within the chairman of the Federal Reserve, like these economists within the Federal Reserve, based on their meeting from yesterday, have indicated, hey, guess what? The economy is slowing down. Guess what we're going to start doing this year? Cutting interest rates. Yes, exactly, okay? Now, you might be thinking initially, okay, how does this pertain to me? Let me tell you that detail. And again, why I want to share that with you, because this is actually a good news in a variety of ways, okay? So first off, they're already anticipating and they are bringing into this meeting here, and they're indicating likely 3 interest rate cuts of 25 basis points, which is 0.25%, 3 of them this year alone. Now, that is what they're anticipating as of right now. However, we've heard so much so far this year and late last year, obviously late 2023, we heard a lot of information coming out suggesting we're going to see a major economic recession, a major economic contraction, something like that this year for 2024. Well, what do you think is going to happen if we do enter in a major recession? Do you think they're going to cut interest rates even more aggressively? I'll just tell you the answer. Yes. Yes, 100% they will, okay? This is based on current economic factors, as in, if the economy does nothing other than just continue to glide along at its current pace right now, they will cut interest rates by at least 75 basis points, or 3 cuts of a quarter point each, 25 basis points each, okay? So they're already baking into the cake here 3 of those cuts so far this year. So lowering the federal funds rate, which is basically the interest rate from the Federal Reserve, down to around 4.5% is what they're anticipating by the end of 2024, based on the current economic conditions. If the economy weakens even further, they will cut that even more. Now again, how does this all come back to you, your finances, your money, all the stuff like this? It simply means this. If you have any debt of any kind, which if you don't have any debt, well then hats off to you. I mean, seriously, you're doing way better than a lot of people if that is your situation, because the vast majority of people have debt, as in credit card debt, we have mortgages, we have all kinds of stuff. I mean, seriously, all kinds of things, right? Auto loans, student loans, all kinds of stuff like this, okay? Home equity lines of credit, all stuff like this, and it's all pegged to interest rates, okay? So as these interest rates start to come down, based on what the Federal Reserve is suggesting here, it's simply saying that, hey, we're not getting hammered nearly as much by high interest rates because the Federal Reserve has raised these up on us, okay? Now, that's very important to understand. Now, next, I want to point this out really, really fast here, and then I'm going to wrap this up, which is the interest rates that we are currently seeing right now, as in 5.25% to 5.5%, which is the range that the Federal Reserve has established by raising interest rates. These are the highest interest rates that we've seen since 2001. What did we see in 2001? Yeah, we saw the major dot-com bubble bust, and we saw the major economy contraction, recession then as well, okay? So if we're starting to see numbers that we haven't seen since, I don't know, 2001, one of the last times that we saw a major economic contraction, do you think this is going to be important? Yeah, definitely very important, okay? So what they're seeing right now on the horizon and why they're talking about cutting interest rates already this year is great, okay? We're starting to see cracks in the economy, and we're starting to see the Federal Reserve announcing here, hey, get ready, everybody. We are seeing this happening, and we're going to be cutting interest rates. Now, again, what are their intentions behind this? Because they're starting to see the economy slowing down. Now, are they going to tell us the whole picture? No, they're not, okay? Either way, this is great stuff. This is going to be very nice, and it will be financially beneficial for a lot of people in a major way, okay? This is exciting. Even though you might think initially, hey, this doesn't pertain to me, it does. Guarantee it, okay? Anyway, I'm going to continue watching this very closely. I'll bring you all the details. If you have not done so yet, make sure to subscribe down below so you don't miss any videos going forward. Share the video with your friends on my social media. Leave a comment, your questions, your feedback down below. Otherwise, go back and check out any of the other thousands of videos here on the channel, including those I have linked down below in the description or at the top of the comment section. And until next time, enjoy your day, take care, and I'll catch you again later in the next